While some are winning in Saudi real estate, others are still waiting for the perfect moment. But the truth is, not all real estate in Saudi Arabia is moving equally. In fact, while the overall market is still growing, some segments are clearly outperforming, while others are already under pressure. So the real question is not, is the market strong, but where exactly is the money being made right now? In this video, I'll break down where the real opportunities are and where you need to be careful. Let's start at the top, the location. Across Saudi Arabia, real estate performance varies significantly by city. Each market is driven by its own dynamics, demand, and growth cycle. Yet, Riyadh clearly stands out, driving the majority of growth and investment activity. And there are three solid fundamentals behind it. Economic concentration, population growth targeting 15 to 20 million residents by 2030, and strong demand across residential and mixed-use developments. This has led to significant pressure on housing supply. At the same time, rental increases of up to 20% to 40% in recent years. In contrast, Jeddah is more stable with slower growth and a more balanced supply. Eastern Province, on the other hand, is more linked to industrial and energy cycles, showing steady but less aggressive growth. So what does this mean? The opportunity isn't evenly distributed, and Riyadh remains the main demand driver where most of the capital is flowing. But here is the catch. The city is only part of the picture. Even in the strongest market, not every property type performs the same. So now, let's take a closer look at asset classes. Villas and townhouses are still seeing strong demand supported by end-user buyers and limited supply in key areas. Apartments have more of a mixed performance with pressure in mid to lower segments while showing better resilience in prime locations. It's also important to note that allowing home ownership for international buyers is expected to influence how supply and demand dynamics evolve. Mixed-use developments remain increasingly attractive, especially those that are integrated with lifestyle, retail, and Grade A offices spaces with smart and sustainable infrastructure solutions. As a result, office space in Riyadh is performing very strongly. Companies are expanding, and more regional headquarters are relocating here. You can see this in prime areas, where vacancy rates are quickly declining. Finally, the logistics sector is going through a major boom. Not the traditional warehousing, but rather high-tech, smart facilities that optimize operations and realize cost efficiency. What this tells us is that demand is becoming more selective and more specific. It's no longer broad, it's targeted. And that's why today, you don't make money just by being in the market. You make it by choosing the right segment. So once you're in the right segment, the next question is returns. This is where many investors get it wrong because in recent years, much of the market has been driven by capital appreciation. But now, we're seeing a shift toward yield and income stability. For example, residential rental yields in Riyadh are becoming more attractive, driven by rising rents and sustained demand. At the same time, capital growth is starting to slow compared to previous years, which means the strategy is changing. Before, it was simple, buy, wait, and sell at a higher price. But today, that approach is no longer enough. Investors are now focusing on assets that generate income from day one, with a clear income and exit strategy. This is a major shift in how the market operates. This is the part most investors get wrong, or simply avoid. There are segments where investment risk is increasing. Locations without strong infrastructure or demand drivers, oversupplied residential areas, undifferentiated retail projects that lack user experience. With a large pipeline coming to the market, not all projects will be absorbed at the same pace. Therefore, not all assets will maintain value. Here is why we stress on the fact that the market is no longer forgiving. Bad decisions will be exposed much faster than usual. So what are experienced investors focusing on? It really narrows down to three things: location quality with proximity to demand centers, infrastructure, and connectivity; product market balance that leads to product aligned with actual demand; income visibility. Here the investor should be able to know if the asset can generate stable, sustainable cash flow or not. Looking ahead, opportunities still exist, but they are becoming more targeted. So we are likely to see continued strength in Riyadh, where growth lies in well-planned, integrated developments backed by strong performance in assets aligned with real demand. But at the same time, there will be greater pressure on weaker segments. In brief, the opportunity is still there, but it's no longer obvious. If you're looking at real estate investment in Saudi Arabia, the key is not just entering the market, but understanding where to position yourself. In the next videos, I'll be breaking down how developers structure deals, where the biggest risks are, and how to evaluate opportunities properly. If you want to follow this breakdown in real time, subscribe and stay connected. And if this gave you a clearer understanding of how the market really works, share it with someone involved in real estate. If you're working on a specific project or investment decision, you can reach out directly at landcapital.sa@gmail.com for a focused discussion. I'll see you in the next one.